I want to say thank you for everybody for joining. We do have a smaller group tonight, but that's great. That leaves more time for Q&A, and that's perfect because usually people are not trying to call the local Social Security office and wait for hours. So this is great. So after the event, I could definitely answer any general questions you may have. Now, I don't know if everybody on the call was there for last week's meeting, so we'll do a quick little recap of what we had already covered, and then we'll just go ahead and move on to the new topics. As for Social Security offices and our field office operations, at this time, you are not available. We are not available to come. You cannot come into the local office due to still social distancing guidelines. If you've ever been to any Social Security office, you know that that is not a great place to social distance. Our lobbies get full fairly quickly. And now in some instances, we will make an appointment if it's a dire need, homeless, vulnerable population type of situation. That's a case by case basis. However, for the most part, everything can be done over the phone. We're taking claims on the phone as we were before COVID as well. People had the option to do claims on the phone or come in. So we're doing everything on the phone, answering any questions on the phone. So everything's available on the phone. And the link to get to your local Social Security office, if you need to call them or mail something into them, I will be giving, actually the Newport News Library is hosting, and they'll be sending an email with a follow-up links, letting you know how you can find your local office and some attachments as well. So hopefully you will find that information helpful. But if you do need to locate your Social Security office, you could just you can use the website Social Security or ssa.gov/locator, and you can put in your zip code and you can get the number to the local office. And again, office hours are Monday to Friday, 9 to 4. So our office hours have not changed either. Also, as for online services, I'm going to go ahead and run through some things with that. So again, my name is Liz Odhwani. Lizna Odhwani. I'm with the Social Security Administration. I've been with them for 19 years now. I've worked in a lot of different offices in Atlanta, Georgia, Houston, Texas, Dallas, Texas, all over Richmond, all our counties in Richmond. And also now I'm in public affairs, so I'm all over Tidewater and other cities also around the state. So not just this area, but also Harrisonburg and Danville and all over. So definitely stay busy with education and outreach. So the next slide is the agenda. And so last week we covered the Social Security number and card. The point of the number was to pretty much make sure we take out Social Security taxes so that you can get your pension, and we're going to go over that a little bit. The My Social Security account, the statements, and of course, the Medicare. And now we're going to go into applying for other benefits and FAQs as well. So we're going to run through everything the first half fairly quickly, and then we'll go into other benefits and family benefits as well. So the next slide talks about the Social Security card number and card. And as I stated, the actual number, the Social Security uses your Social Security number to record your earnings. So if you remember getting those green and white statements in the mail, the reason we used to send them to you was checks and balances to make sure that the information that we have for you is correct, right? That was very important because that affects your benefits. And we no longer send it out because people steal people's mail. And that was a very important document because it had your entire work earnings, right? Your entire history. So, and how much you can get in benefits in the future, or if you file for disability, and how much your family could get. So it had a lot of personable information. So what ends up happening is now if you create your My Social Security account, you could see that statement online, along with doing other things. You could get your Social Security card replaced. If you are over the age of 18, a US citizen, and you lost your Social Security card, I'll show you, I'll send you the link, and you will have that here as well in a little bit on how you can go ahead and create your account. And it's really just ssa.gov/my-account. And on the bottom of each of these slides, you'll notice our website. So you could do ssa.gov or socialsecurity.gov, whatever works. And you could do /my-account to create your account, and /locator to get the Social Security office near you to call them. And that's their direct number, even though it's an 866 or 877 number, it is the office's direct number. So again, the reason for the number was, and it was passed 86 years ago during the New Deal, Franklin D. Roosevelt's time. And it was after the Great Depression, right? To get America back to normal. And so that, and get out of poverty, really. So at that point, that's why they created these new programs like unemployment, which, as you know, last year, many people had to apply for. Social Security, aid to families with dependent children. So a lot of these programs were passed a long time ago to help America get out of the Depression. So again, that was the purpose of the number. Now it's used for different things like credit and things like that. The next slide, but our purpose at the Social Security Administration is just to count your earnings. That is still the reason why you have the number. That was the reason it was created, and that's what we do. The next slide, this slide talks about FICA, which is the tax that you pay. So the Social Security tax that you work and pay into. It could show OASDI. Sometimes it just says Social Security tax, or it shows FICA, and it stands for Federal Insurance Contributions Act. It is 7.65% that's deducted from your check. Well, really 6.2% is for your benefits, your money, and then the 1.45% is Medicare Part A, and that covers 80% of your hospital bills. And the other thing with Medicare is that the employer matches it. So with the FICA tax, actually 7.65% is what comes out of your check, and then your employer matches it at another 7.65%, so that you can go ahead. So then you actually get a little bit over 15% when it's time for you to file. So definitely check your pay stub next time and see that your employer does match it. And it should be the exact amount as whatever they deducted from the Social Security tax. I actually looked at mine today and I was like, oh, okay, I actually do see it. The next slide just talks about your Social Security replacement card. As I said, if you're over the age of 18, a US citizen, and you just lost your card, you need a new one. That was the number one reason people would come into the office, as they lost their Social Security card. Now you can request it online. All you need is a valid driver's license or a state ID. And you could definitely go ahead and just get it requested. It'll be in the mail. It'll come to you within 5 days. It won't even take 2 weeks, really. According to one of my friends who did it, it was there less than 2 weeks. So that's great. In fact, my brother did it too, and he even said it was less than 2 weeks. So it works. You could definitely try to do that. The next slide is just telling you about protecting your number. As I said, those green and white statements, we don't mail them out anymore because of identity theft. Now, we're going to protect your Social Security number. We're going to keep your records confidential. But you want to be careful about sharing your number, even if you're asked for it. Keep your card and other documents that show your Social Security number in a safe place. If you remember, we used to have your Social Security number on the Medicare cards. We now, we stopped sending out, the Medicare cards are now an alphanumeric number, because we no longer want you to walk around with your Social Security number. So even those cards have changed, like the DMV changed it to another customer service number. It used to be your Social Security number before. And again, we don't want you to routinely carry your card. So the next slide talks about fraud and scams. Now, again, this is from 2019. I will tell you, 3.2 million fraud, identity theft, and other reports were reported. But again, more, of course, in 2020, more of these reports came in. And remember, these are just the ones that are reported. Not everybody reports it when it happens to them, right? If you get those crazy phone calls telling you your Social Security number is suspended, you're going to learn today under family benefits that your Social Security number is never suspended, not even after you pass away. So again, you can hang up on those calls. You could curse those people out. It doesn't matter. They're not Social Security workers. I will also send you a link on how to report those calls. And we want you to report those calls because we can track them by zip code to see what area in the United States are getting most of those calls. And then they could try to track down and see if they can find somebody who's been working with people there. Most people think those calls are from overseas, and a lot of them are, but we were able to get people in North Carolina. That's a lot of where our bankings are, our banking corporations are. We did find people in New Jersey, in California, in Atlanta, actually, too. So there's been a lot of people that have been working locally with these people, and they've been helping them. So obviously you do want to report it. This is saying in 2019, 1 out of 10 people lost money, but in 2020, the new report shows it's 1 out of 5. So again, this number is growing, and $667 million just lost funds. And so we definitely want you to hang up and report those calls. Do not give your money out. Do not talk to them. We would never suspend your number. So if you get a crazy call like that, just hang up. The next slide is just again reminding people we do contact citizens if you've called us. So if you've tried to make an appointment with us, we're going to call you back. Yes, if for customer service reasons, right? But we're never going to threaten you. We're never going to arrest you or say that, we're not FBI. We're not here to arrest you. We're not IRS. Even the Census Bureau people have been trying to get their social security number by saying they're with the census. Now the census doesn't need your social security number. So there's been a lot of that happening as well. But to report it, that's the website on the bottom, https://OIG for Office of Inspector General .ssa.gov/report. And you will see this link afterwards as well. The next slide talks about the My Social Security account. And the slide after this is the link to the account. Like I said, it's great. The slide after this tells you how to open one. So visit socialsecurity.gov/my-account. You want to select sign in or create an account. It's going to ask you some personal questions because it wants to make sure it's you. Okay, it's multiple choice. Some of them are going to be trick. Some of them could be none of the above. Some of them could be all of the above. That's fine. If you get suspended because you didn't answer questions right or get locked out, that's okay too. You can try back again in 24 hours, okay? But we definitely would recommend, I have My Social Security account. I'm in my 30s. It's going to be a while before I can retire, but I'm not going to remember what I made in 2021, 30 years later. So I'd rather be proactive than reactive. Check my W-2, make sure it's showing up correct, and then I'm done. So it's only a few minutes where you would go in, log in, make sure your information is right, but it is important to have. Then you'd use, of course, your username and password. And every time you log in, you're going to get a security code via text or email, whatever you choose. The good thing about that is because it's in real time, right? When people ask me, is it going to be something that would get hacked? I always say, no, this has not been hacked yet, knock on wood. However, you want to open up your account because you want to make sure nobody else has opened one up for you, right? Those green and white statements are no longer being sent. Somebody could still have, and the reason is identity theft, right? So it's a possibility that somebody could have your information out there, even a friend or a relative that you might trust. So you definitely want to make sure that you check your information, make sure all your information is right. Even if you're on benefits, there's so many things you can do. If you're on Social Security benefits or Medicare and you need to update your address, your phone number, your direct deposit, get your 1099, get your proof of income letter, you could do all of that stuff online too. So that's helpful not only for people that are not on benefits, but also for those that are. The next slide just tells you to do your username and password. Every time you log in, you'll get a security alert. And the next slide tells you if you're not on benefits, again, you can get your Social Security card replaced, whether you're on benefits or not. As long as you're over the age of 18, a US citizen, you need a replacement card, you can do that. If you've applied for benefits, let's say you've applied with this on the phone, or you came in before COVID and you applied, or if you did it online even, because you can file for all of these benefits online. Other than survivors, you can apply for retirement, Medicare, spousal benefits, disability benefits. You could do all of that online as well. But you can still call us and do it on the phone. We do make phone appointments. But if you want to check the status of your application, you could check the status of your application, the status of your appeal. You could file your appeal just like you could file your application. If you need a proof of income letter to show how much your benefits are, you'll get that. If you're not on benefits yet, it'll show 0. So if you need that because you're applying for another program, you have access to that as well. And again, you can see your statement. Everything is housed. So we have different calculators as well, not only for you, but also for your family, your spouse even, if you're trying to figure out when to start benefits. We have 11 different calculators. So it's a very helpful tool because everything's already housed in there and it's very secure. The next slide talks about the statement. And again, this is it's a recap. So I'm going to go fairly quick with this and then we're going to go into the new stuff. But this is what the statement looks like. And again, the link to that is ssa.gov/my-account/statement. But when you create your account, that's the first thing you're going to be able to see is your Social Security earnings, and you can download your statement. And this is pretty much what was mailed out, right? So the next slide talks about your benefits. So this is what the different benefits look like: retirement, disability, family, survivors, and Medicare. And this is very important because like I said, it's pretty much what you're going to receive when it's, you want to be proactive, right? You want to make sure, because people don't know what's going to happen. 2020 was a very scary year. A lot of young people passed away due to COVID. We had a lot of young doctors who passed away helping people as well, right? We had a lot of people pass away. And the thing about it is that it might, you might not have filed yet, you still might be young, but if you have young children, anything can happen. A car accident can happen, anything can happen. They can get survivor benefits if they're under the age of 18. A spouse can get child and care benefits if they meet those requirements, even if you haven't filed yet, even if you never took it. So they could still get survivors. Again, disability can happen, right? A lot of people that were thinking about retiring later lost their jobs. So then we had an increase in retirement claims last year, so there, anything can happen at any point, so you want to always be proactive. The next slide is a list of your earnings history, and this is important. Now let's say we have something wrong from 1995 and you keep everything very organized and you have your W-2 from 1995 because you're finally reviewing it. Well, if you have your W-2, you can mail it into the local office and we will update it for you. So there is no statute of limitation. At any point, if you have your W-2 or the correct tax return information, if you're self-employed, your Schedule C or your Schedule SE, whatever it is, we'll be able to go back and we can update it for you. So make sure you keep your records if you need to update it. That's why we recommend, we used to send it out every year around your birthday so that you could check it every year and not worry about what was on there 10 years ago. But since you're home now, a lot of people are home or working from home, you might have the time to log in and even check that. So if you have proofs, we will update it for you. If there is a discrepancy, there could be a typo, maybe your employer put in something wrong, so if you have your proofs, we can go ahead and correct it for you. So the next slide talks about retirement benefits. And again, the slide after this is just a reminder that we were never meant to be your only source of retirement. It doesn't matter if your spouse gets benefits, if they have a pension, if they're working, if you have $100,000 in your savings account, investments account, any other income, that's fine. You could be getting a VA check, you could be getting unemployment, all of that. If you could get another pension from VRS, it's not going to count against your Social Security. Social Security was really, for most people, it supplements only 40% of their pre-retirement income, meaning what their wages were and all of that. So obviously we want you to have other income or other resources available for you. So that's, so definitely we want to remind you to do that. Now, the next slide talks about how you qualify for retirement. So again, you need 40 credits, which is 10 years of work every 3 months. You have to make a certain amount. And in 2021, that amount is $1,470. So January, February, March, you made $1,470, you've earned a credit. April, May, June, July, August, September, October, November, December. So if you've earned $470 in each of those quarters, which you probably have because you have bills, right? And in 2021, as long as you've made $5,880 for the year. So if you take 1470 times it by 4, there you go. That's that 5,880. So as long as you've made that for the year, you've earned your 4 credits. Really, this is for people that haven't really started working yet. They haven't had their 10 years in, or maybe they're working part-time. So this will kind of help them track, their earnings to see if they have at least 40 credits. And that's all you need. You only need 10 years of work to get something. Like I said, you might not get a whole lot, but you will get something. You can file for retirement as early as 62. So that's pretty much describing that. And the next slide talks about how it's again, we did go over this a little bit more detailed last time. So I'm just doing a quick recap. So sorry if you feel like I'm rushing, but benefits are based on earnings. So what we do is we look at the last 35 years of the last 40 years of work. So even if you've had 10 years, then we're going to add 25 zeros into the mix to equal 35 years. So again, you might get something, but it might not be a whole lot if you've only done 10 years. That's just your minimum. But if you've worked throughout your lifetime, or you worked and you had a pretty healthy career or different jobs, then, you're going to obviously, we're looking at the highest 35 years of the last 40 years of work. We're going to drop the lowest 5. And then we do take into consideration inflation because the value of the dollar has gotten less. You need more money to live. So like what you could, a car in 1970, the value, you could buy it for a lot less than you can now, obviously. So again, you need more money to live. So the value of the dollar has gotten less. So that's why it's also important that you track your earnings, because we're not going to pay you dollar for dollar when it's time for you to retire. We're going to take what you've made in 1980. If you've made $20,000 in today's value, that 20 could equal 50. So, instead of counting 20,000, we're going to actually count 50,000, whatever that $20,000 is worth in today's dollars. So you can have a livable pension. So not only do we look at the highest 35 years of the last 40 years of work, we also take into consideration inflation. So those are two things. That's why it says result in average index monthly earnings. So you can also, or the first step, your wages are adjusted for changes in wage level. So we look at inflation, and then that's what we figure out what you can get at your full retirement age. And the next slide talks about, just reminds you if there's a gap, then of course that's going to be a 0. And unfortunately, if you don't have 35 years of earnings, we calculate your benefit using zeros. So again, you need to have at least 10, and 10 years. But as I always say, you want to be proactive, not reactive. So definitely review your statement, because your employer could have messed up, or, you never know. There could have been any mix up. So the next slide talks about when's the best time to retire. And the example I said, at full retirement age, this person would have been 66 years old. They would have gotten $1,000. As you notice, as if you take it early, there is a reduction. And if you wait and you continue to wait and even past your full retirement age, in this example, we're saying 66 is the full retirement age, they're going to get $1,000 for every year they wait, even if they're not working. But for every year they wait, they're going to get an 8% increase. So you can start it as early as 62, but you can wait as late as 70, okay? Because you get that 8% increase even after your full retirement age if you don't take it. And even if you're not working. And a lot of people might delay it because for taxes, maybe they have other income and they don't want to pay so much in federal taxes. I mean, who knows? Or they just want to continue to work. But you don't have to take it at full retirement age. You can wait. There's no benefit in waiting past the age of 70. And for every year you wait, there could be an 8% increase. So really it's really a personal decision. But the thing about it is that if you want to take it at full retirement age or after and you're working, you can make as much as you like and you could draw the benefit. Now, if you're working, you're still paying into Social Security taxes, right? Your employer is still taking out for it. So the good thing about that is that your benefits get recalculated if you're going to get a higher benefit. So one of those 0 years or one of those lower years that we counted could get replaced by what you've made last year even. And then that way your average could possibly go up and you'll get a letter stating, hey, we owe you some money. And in the fall time is when you'll probably get a little bit of a back payment, which is great because your family, that if your average goes up, then your family can also get a little bit more based on your earnings when you file or if you pass away. So it's helpful. So the slide after this talks about working while receiving benefits. And as I said, if you take it before full retirement age, there is a limit to how much you can make. And in 2021, and these are figures for 2021, again, these figures change every year, cost of living, so it goes up a little bit. But if you're working while receiving benefits and you're under full retirement age, for a full calendar year, you could make $18,960 if you're receiving benefits, those full calendar year. If you take it in the middle of the year, you have to make sure you stay under the monthly test, because if you take $18,960 divided by 12, that's $1,580 a month. So if you take it in June, pretty much from June to December, you got to make sure you stay under $1,580 a month. But if you take it, let's say the year before, and you're just trying to get a check every month in 2021, then from January through December, you got to stay under $18,960. For every $2 you make over that, we withhold $1 from your check. So let's say you're going to make 20,000 with a part-time job. Then from 20,000, we're going to subtract 18,960. Whatever's left, we're going to divide it by 2, divide it by half. And then that's going to be how much you have to pay us back. So that's the overpayment amount. So you want to make sure you stay under the limit, or if you go a little bit above, that's fine, but you definitely want to stay as close to the limit as possible if you're drawing benefits. Now, the year you turn full retirement age, you do get a little bit of a break. You could make up to 50,000. So for example, let's say you're turning 66 next year and you started your retirement, you weren't working that much, but now you're getting stir crazy. You want to go back to work, right? And so you want to increase your hours, right? You can do that because the year you're turning full retirement age, you could make a higher amount. So let's say you turn 66 in June. And if that's the case, from January through May, you could make $50,520, which is, this is the next slide. I'm sorry, the next slide. So you could make $50,520 between January and May. And then after June, you're free to make whatever you want because that's when you turn 66. And from January through May, you could, for every $3 you make over that 50,520, we withhold $1 from your check. So you do get a little bit of a break the year you turn full retirement age. Adrian? This is I'm on the next slide after this. I just want to make sure. Thank you. Thanks. So those are the dollar amounts on the retirement. Now, so if you're under full retirement age, that's showing the 18,960. And then of course, if you're over, or once you, for the 2-for-1, and then the year you turn full retirement age, that's 50,520. That could be just in a few months. And then once you hit full retirement age, you're free to make whatever you want. So that's the calculation for that. The next slide talks about our little calculator. We have 11 different calculators. As I said, nobody knows how long they're going to live, but some people do want to kind of take that into consideration when they're thinking about taking benefits. Should they take it at 62, or should they take it at 66 or 67 or even 70? When should they take it, right? And how long their parents lived. And that kind of gives them an idea of when, when they should take it. Again, we have, if everything is housed online. So the thing about the statements is it gave you the options of 62, 66, and 70, right? 62, your full retirement age, and 70. So now what happens is, what if you don't want to wait? What, in an ideal world, that would be great. But, what if you want to take it at 67 in 3 months or 64 in 5 months? Everything's already housed online. So you can go ahead. We have calculators for early or late benefits, or early or late retirement, which is in our estimators. You have benefits for spouses. So we have a lot of different things available for planning purposes. And a website for that is going to be ssa.gov. Of course, everything is ssa.gov/planners/calculators. And again, you will see this link later, but it's very easy. It's ssa.gov/planners/calculators, and you'll have access to all of that. Now, the next slide just reminds you about the calculator. Again, this just kind of tells you when you plan on taking it, and you can put in some estimators, like estimated amounts if you're going to still continue to work, or you could just put zeros, and then it'll tell you how much you could get. So that's great. And then again, you can even apply for it online. So the next slide talks about disability benefits. The slide after that defines disability. And again, disability, or SSDI, is pretty much for people who are no longer able to work, or only work a limited amount. And in 2021, that amount is $13.10 a month. So if you're working, you cannot be making more than $1,310 a month gross and file for disability. Okay, so we do have an amount that you have to stay under. Our substantial gainful activity limit is $13.10 a month before taxes, before anything is cut. If you're applying for regular Social Security disability, and that's what you've worked and paid into, it shows up on your statement. Okay, that's the disability portion of it. And more information is ssa.gov/disability. The slide after this is the quick 5 steps I mentioned last time. How do they make a decision? Number 1, are you working? Are you making more than $13.10 a month? Or if you are, then you're not eligible. But if you aren't, then we can continue. And this is before taxes, before anything is cut. Is your medical condition severe? Remember, it has to last for a year, or expect to last for a year, because you don't have to wait a year to file, but it has to expect to last a year, right? So is it really long-term, or is it short-term? Because we don't pay short-term. Right? So does your impairment meet or equal a listing? And I mentioned the Blue Book, which has all of our listings. And again, you don't really have to memorize that book or anything, but we do want you to know that you want to list everything, because it might not meet a listing, but it could equal a listing, right? So you want to mention anything that's going on with you. Yeah, you had a back issue, but it's causing you to have depression, or, you're sitting around more. So maybe you're overweight, or maybe you have diabetes or high blood pressure or something else. List everything. Okay, because you never know. or maybe, so again, can you do the work you did before? So we look at your previous work history to see if you can do the same type of job, depending on what your doctors say. And then can you do other work? So we look at your education as well. So those are the 5 steps that the disability termination services look at when they're trying to make a decision on your case. And the more information you provide, the better, right? The next slide talks about how work affects disability benefits. So again, we do try for people to become more self-sufficient. We have a red book. So the blue book is for your medical stuff. The red book is our work incentives. And again, you will see this link as well. That's also going to be part of your follow-up. But you will definitely be able to, we do talk about Ticket to Work, where you can try to get free for all our beneficiaries that are on Social Security disability or supplemental security income, which is a needs-based program. They can actually get free vocational rehab with the Ticket to Work program. So there's a link for that. We have trial work periods. We have impairment related expenses. So I did talk a little bit about that last time as well, because this is an overview. So the next slide talks about supplemental security income, which is the needs-based program, also for people that are disabled or the age of 65. You do have to have limited income and resources though. So if you are 65 or older, as well as for anybody younger, including children, but you have to have a disability. So if you're 65 or older, you don't have to have a disability, but you do have to have lower income. But we do a financial screening on that. But if you're taking it prior to 65, you do have to have a condition, and even children can receive it. We look at parents' income if a child is under the age of 18 and living with parents. If a child is not living with parents, we don't look at anyone else's income, but just the child, if the child has any child support or anything coming in. And if they're an adult, we just look at spouse's income. So again, it does vary depending on your age, but it is open to anybody who is financially needs it. There are some citizenship requirements on this because it's needs based, right? You haven't worked and paid into it, and so they look at all of that. The next slide was the side-by-side comparison of Social Security disability, what you worked and paid into versus supplemental security income. Main thing is Social Security is insurance, right? What you worked and what you paid into, like retirement. So again, it's not based on need, it's based on work. You can have other income, but with supplemental security income, it's based on need. So you don't have to work, but we do look at your financial screening. So 2 different non-medical requirements, but medical requirements are pretty much the same because it has to be a permanent condition, right? And it has to limit work. And for children, we're looking at school records and IEP records, but the person has to be disabled. Now, the next slide talks about the appeals. So if you disagree with a medical condition, please file an appeal. You have 60 days to do it from your decision date. And then again, you could do that online. A reconsideration is, I encourage you to file your appeal, because if you get approved at any of the appeal levels, then you will get back payment. But if you just wait out your 60 days and start from scratch because you got denied, then what ends up happening is you lose money if you get approved because you won't go back, right? So reconsideration is exactly what it is. Somebody else reconsiders the case at the state disability termination services to see if their decision was incorrect. And they do look at your new information as well. A hearing before a law judge, so you can go in front of a hearing. That's the second step of appeals. Then you have the appeal council review and then federal court review. So again, highly recommend you doing an appeal. Now we're going to go into other Social Security benefits. I'm going to slow down a little bit. So other Social Security benefits. The next slide is benefits for spouse. So we talked about your retirement, your disability, your account, all of that good stuff. Now we're going to go into spousal benefits. Now, I love spousal benefits. We do ask a lot of questions when we're asking about family members. And the thing about family, that Social Security or Social Security, retirement, disability, whatever it is, it's definitely when you work and pay into it, you see that section for family benefits. It's not only for you, it's also for your family, So again, a spouse can get up to 50%. So for example, when this was passed 86 years ago, by Franklin D. Roosevelt. At that time, 2 people were not always working for wages. One was working, both of them were working. One was in the household, they were working, but they weren't really getting paid for it, right? So what happens is when it's time for people to retire, that one check had to cover 2 people, or at least 2 people. And that's not right. So what they did was they opened it up for spousal benefits. Now, in 2020, since then, now fast forward 86 years later, literally 86 years later, that's different. You have two people in the household working, you have men, women working, you have, there is no discrimination. But back then it was very different. So a spouse can get up to 50% if their own benefit is less than 50%. Then a spouse can get 50%. And that can happen still. I mean, that's still a possibility. Some people do qualify as spousal benefits. So let's say your benefit as a spouse is going to be 400 and your spouse is going to get 1,000. Well, if you wait until full retirement age, you can actually get the extra 100. It's not going to affect their benefit. They're going to get 1,000 based on what they worked and paid into their highest 35 years inflation. That's their calculation. You're going to get maybe 400 off of your own work history. And then if that's the case, and if yours is less than half at full retirement age, because we compare the two records at full retirement age at 66 or 67, whatever it is for you, 66 and 10 months or 8 months, whatever it is. So when you go ahead and apply, number one, not only are we looking at your age as a spouse, because if you're taking it before full retirement age, you're going to have a reduction. Instead of getting $500 from your spouse, you could probably get 300 or 400, or 320. Just depends on your age at the time. And then that's why we have that extra calculator online, because in an ideal world, everybody will retire at full retirement age. You'll get your full amount and they'll get 50%, right? But that doesn't always happen. So a spouse can get benefits off of a spouse's record or even an ex-spouse's record, but they can only get up to 50% if their benefit is less than half. So their own benefit at full retirement age has to be less than 50%, and then they'll get whatever they're getting plus whatever can make up that 50%. So they'll get their 400 and then an extra 100 if they're waiting at full retirement age. If their spouse is going to get 1,000. So that's how that works. Now, if you're filing as a spouse, you cannot, and you're still married, okay, not divorced, but if you're still married, you have to wait until that spouse draws benefits. You can go ahead and take your own, but you have to wait until they start drawing their benefits for you to get anything off of their record. And that could be for a separated spouse too. So it doesn't have to be that you're living together. If you're separated, but you're still legally married, then you got to wait until they start drawing their own benefits so you can get up to that 50%. Okay. Again, if you take it before full retirement age, that's why we have that calculator for spouses under your own benefit calculator. If you have a spouse and you want to know how much they can get for planning purposes for your household income, then they could get a reduction if they take it before full retirement age. So let's say you, in this day of age, let's say as a spouse, your benefit's going to be 800, the higher one is going to get 1,000. Then there's no point in you filing, because you're only going to get up to 500 off of their record. You get the higher of the two. The higher of the two is yours, because you're going to get 80%. You're going to get $800, not $500. So it's better for you to go ahead and take your own. So that's what we mean by the 50%. Again, they're going to get their 1,000 no matter when you take it or if you take it, because at the end of the day, we've done their calculation just like we would do your calculation. So that's how it works for spousal benefits. The other thing with this, so that's how that works for spouse. Now, the next slide talks about divorced spouses. And for a divorced spouse, you don't have to wait until your ex takes it. Your ex could be remarried. They might not want to take their benefit until 70. You're ready to take it at your full retirement age, or even 62, or even like 63 or 64, whenever you want to take it. You can take it as an independently entitled divorced spouse, so that you don't have to wait for them. Okay, that's different for a spouse that's still married, but you don't have to wait for your ex-spouse, regardless if they're remarried, regardless if they have a family. It doesn't matter. We're looking at you, the applicant. So the applicant, you cannot be remarried. Number one, you had to have shown proof of marriage for 10 years. So you have to have been legally married for at least 10 years, and you have to be single or, you could have been divorced a few times, and that's fine. As long as you're married to each one for 10 years, we'll go in and we'll check which one you can get a benefit from if your benefit is less than half of anybody's. If your benefit is more than half, then you're going to get your own, right? But if they're still living, and even if they haven't drawn it yet, you can still get up to 50%, okay? So their benefit has to be more than 50% for you to get the higher of the two, for you to get that. You have to be 62 years old, and your ex has to be 62 years old. The catch is, though, if you get remarried, then you lose this benefit. So you know the cute little couple that's in the nursing home and they're never getting married, but they're always going to hang out. Why? Because one of them is receiving an extra benefit from an ex's record, and they know if they get remarried, that's going to mess up that benefit. Okay, so we don't care if they're remarried as long as your ex is 62 years old. If you married somebody younger, you might have to wait. But as long as they're 62 years old and you're 62, you can go ahead and take it as long as you were married 10 years or more. And again, you have to be single regardless if they're remarried or not. Again, if you take it before full retirement age, you are looking at a reduction, right? So the ex-spouse is at least 62 and eligible for Social Security benefits. They don't even have to be collecting it. And we would look at your own record to see if you could get the higher benefit. So it doesn't matter if they're remarried or what their plans are. We're looking at you as the spouse. The next slide is called deemed filing. So if you were born on or after as a spouse, so if you were born on or after January 2nd of 1954, meaning if you were born before 1954, okay? No, sorry, after 1954. If you were born after 1954, or if you turned 62 after 2016, in 2016 or after, and you qualify for both your own retirement and a spouse, meaning your spouse has taken it and now you can get benefits off of them, because you can't get benefits if they haven't taken it, right? If you're still married or if you're a divorced spouse. You must apply for all benefits. That's called deemed filing. So if you were married before, if you were born before 1954, you have a choice. You can take one, you could hold off, wait until you take the other. Even as an independently entitled divorced spouse, right? You could take the divorced spouse benefit and then you could go ahead and wait and take yours later. You could do that if you were born before 1954. But if you were born after 1954, then you have to take whatever is due to you at the time of your appointment. If you're going to take one, you got to take it all. You got to look into all of it. So again, if your spouse is taking it, you would take something off of them if your benefit is less than half, or if you're an independently entitled divorced spouse, you would qualify to get benefits off of that. So you can't come back and switch around, okay? So you're deemed to file for any other benefits. It applies for any people who turn 62 after 2016, or if you were born after 1954. And so that's information on that. Now, the next slide talks about children. So as you know, children can also get benefits if a parent files for retirement or disability. A child must have a parent who is disabled or retired, meaning if the parent is still living, they have to be drawing benefits, kind of like that spouse who's married to their husband or their wife. They have to wait until they take the benefit. The main person takes the benefit. Same thing for kids. They can't get benefits unless their parents take it. So they have to have a parent who's disabled or retired and did work enough to get Social Security. So obviously they're drawing a check. Now, if they're a spouse, if they're a child where their parents passed away, that's different. But if their parent is living, they have to be on it. The child, of course, is unmarried. Usually if you're under 18, that's not an issue. They're under the age of 18, or they're 18 or 19, but they're still in high school. So it continues until they're 19 and 2 months if they're still full-time and in high school. So if they're graduated from high school, it stops at 18, okay? Or anytime after 18 once they graduate, or if they're a disabled adult. So I'm going to go right into a disabled, what is it called? DAC, disabled adult child. So if they're 18 or older and disabled with a condition that began before the age of 22. So a little bit earlier, I talked about the Supplemental Security Income Program when we did the recap, right? Because we really went into it a little bit last time. So with Supplemental Security Income, it's a needs-based program. And as I mentioned, before they turn 18, before a child turns 18, we look at parents' income if they're living with a parent. So a lot of parents, they'll wait until their child turns 18 because we no longer look at parents' income. We just look at the child's income, and the child might not have much, right? So if that's the case and they get approved through the Supplemental Security Income Program because of their condition and their financial screening, then if they get approved prior to the age of 22, because you have 18 to 22, right? Or you can take it anytime after 18. But if you get approved between 18 and 22, and now a parent is filing for retirement or disability, right? So let's say this child's been receiving benefits. Maybe they have autism. Maybe there's a Down syndrome. Maybe there's some sort of issue. They're still receiving benefits. Now they're 40. Okay, $1 worth of SSI helps you keep Medicaid. So for a lot of people, it's not so much for the money, but it's more so for the medical coverage, right? The Medicaid that they can get through social services. So If that's the case and they go ahead and they file for benefits before 22, they're approved for supplemental security income. Now they're 40, they're still getting that benefit, which is great. They still have Medicaid. Now you have a parent who's 60 or 62 years, sorry, 62 years old or older, or disabled, and they're coming in and they want to file for benefits. We ask you, do you have any minor children or on the phone or even online? You're going to say no because your kids are grown. The next question we ask is, do you have any children that were declared disabled prior to the age of 22? You might say, yes, I have a child who's receiving supplemental security income. They've been getting it since they were 18 or 19 or 20. And so before 22. And, I want you to look into that because, if they can get something off of my record, that's great. So if you have a child that's now even 40, but they were declared disabled before the age of 22, they can get benefits off of your record as a disabled adult child. Even if you're filing for retirement, even if you're filing for disability, they would still get that extra child's benefit. So again, that's very important for people to understand because a lot of people miss out on that extra benefit that could be more than what they're getting from supplemental security income. And that could help the child out, not only while the parent is living, but even after the parent passes away, which is a big relief to a lot of parents because they always wonder what's going to happen to my child, my disabled child, after I pass away. Well, at least you know that they're going to have some money under your record, right? That they can apply for, or it will be automatic if they're already on it if you're on benefits or filed for retirement or disability. So the next slide talks about the three different other survivor benefits. So this is where, like I said, your number never gets suspended. Even if you pass away, that's still your number because people can come forward, a child, a disabled adult child, an ex-wife, an ex-husband, a current wife or a current husband. So you have a child, they may receive benefits even if you've never taken benefits before, like I said, but if you've worked and paid into it enough, you have a minor child, they could get benefits all the way up until high school or until they're 18 or 19 if they're still in high school. 19 and 2 months is the cutoff. A disabled child, as I said, if a parent has already filed, it would automatically convert over to a survivor. But let's say the parent never filed, but they have a disabled adult child and that child is getting benefits and that parent passes away, then they can get benefits as well. So they would also qualify as long as they were declared disabled before the age of 22. They could have been 50, but their parent passed away and they were declared disabled before 22, they can get that survivor benefit if they're a disabled adult child. And then of course the widow, so they can receive benefits. Now for a widow or a divorced widow, you don't have to wait till you're 62. You can actually start drawing it before that. You can start drawing it at the age of 60. However, the work limitations still apply. So if you're taking it anytime before full retirement age for a child or for a disabled adult child or even a spouse or an ex-spouse, you got to make sure if you take it before full retirement age, that $18,960, if you're taking it in 2021 and you're working, you got to be making less than that. So if you are trying to get benefits as a widow or a divorced widow and you're taking it before full retirement age, you got to make sure in 2021 or whatever the year is, you're meeting under, you're working. If you're working, you're making less than that limit. And that's all we're looking at is if you're working or not. You have to be partially retired. That's all we care about. So if you can take it as early as 60. Now, the different thing about a widow compared to a person who's divorced and their spouse is still living is that you can get remarried. So if you are a widow or an ex-widow and you find somebody else, then that's fine. You can get remarried after 60. So that's fine. Now you can take it as early as 50 if you're a disabled widow or a disabled ex-wife. So again, if their benefit's going to be more than yours, then you can definitely look into that. And of course, if you're taking care of a child that's under the age of 16 and your spouse passed away, then you can get it as child in care benefits. I mentioned that a little while ago. But remember, if you're not full retirement age, you can't make as much as you like. Full age, full benefit, you can make as much as you want. But if you take it prior to full age, you cannot work and make as much as you like, and there is a reduction, right? And again, the limit in 2021, I'm going to keep reiterating, as a regular spouse or a divorced spouse or a widow, if you take it before full retirement age, is that $18,960 limit. Okay, so the next slide, we're just going to go a little bit more detailed into the spouse benefits. at worker's death. So if the person passes away, you can get up to 100% if you wait until full retirement age. So as a survivor, if you don't want to take it at 60 because you're still working, or 62 or whatever, if you wait until your full retirement age, 66 or 67, whatever it is for you, you would get what they would get at full retirement age. So there's no benefit in waiting past full retirement age for a surviving spouse or even a spouse that's living, because you're going to get up to 50% if they're living. There's no benefit waiting past that, waiting past full retirement age, or 100% if they've passed away. You don't get delayed retirement quarters as a spouse. You only get it under your own record. Okay, so if you want to hold off until 70, that's under your own record, not through any of these records. That calculation is different. So as a spouse, if you want to wait until full retirement age because you're still working, you can still work after full retirement age and get the surviving benefit. And the thing about a survivor is that if you want to switch over to yours in the future, you can do that. You're not under that deemed filing rule. So as a survivor, if you want to take benefits off of their record at your full retirement age, get that $1,000, you want to continue to work, you can go ahead and continue to work. If yours is going to be $1,300 in a few years, you can just take that later, right? So that's fine too. You can switch if you want to, which is different if your spouse is still living or your ex-spouse is still living, right? And you can't get benefits in jail, so don't even try to do anything so you can get that extra benefit. So again, at full retirement age, you could get up to 100% or less if you take it before then. You can take it as early as 60, and at 60, instead of getting 100%, you would get 71.5% of whatever they would have gotten at full retirement age. It continues to grow every month you wait. And again, there's no increase after full retirement age, meaning you'll get whatever you'll get at the time you hit full retirement age, meaning if you take it early, you're going to be locked into that rate. So, if you want, it's very important that you plan when you plan on taking it, and if you're working and how much you're making. And again, as a survivor, you can get remarried if you're a widow or an ex-widow after 60 as well. It does not affect that extra benefit. So the next slide is just going to be a side-by-side comparison of spouse versus surviving spouse benefits. So again, a spouse if you have a living spouse, okay, you can start benefits as early as 62, okay, just like you could start your own. You would get 50% if you waited until full retirement age or later, meaning there's no benefit in waiting past full retirement age. Again, if you take it at full retirement age, you're free to make whatever you want and you will get 50%. But if you take it prior to your full retirement age, you're under that work limit and you might get less than 50%. But it's only applicable if your benefit is less than 50% of theirs, right? So it's less than 50% if you start before full retirement age, reduction for each month you take it early. But remember, if your benefit's going to be 800 and their benefit's going to be 1,000, this might not even apply to you. Surviving benefit can start as early as 60. So you can get it as early as 60, or if you're 50 and disabled, you would get 71.5% at 60, but remember, work limitations still continue to apply. It increases every month you wait. And again, if you waited until full retirement age, that's the most that you can get is at full retirement age, you would get 100%. And again, if you're an ex-spouse, you should have showed that you were married at least 10 years. So remember, if your benefit is more than that, as a survivor, your benefit's going to be 1,000, but your spouse was only going to get 800, then again, you're better off keeping your own, right? However, at full retirement age, you can get that 800 and then you could switch off later to yours because you get those delayed retirement credits that will continue to build off of your own record, whether you're working or not, right? But for a spouse that's living, that's very different. You can get only up to 50% at full retirement age. And again, if your benefit is less than half, or you're going to get 400, you can then get that extra 100 if you wait until full retirement age to file for you and them. So there's no reduction. Okay. So again, we're going to go through questions. So if you have any general questions after, I will be available to answer any and all questions. The next slide talks about other survivor benefits. So you get the one-time payment of $255. Now, believe it or not, this has gone up $5. So it used to be $250, and I learned that in a webinar as well with some people. So it's a $255 payment. It's a one-time payment for a surviving spouse if they have worked, if the deceased worked and paid into it enough, or minor children. But the spouse had to have been married and living together at the time of death. So it can't be for a separated spouse or a divorced spouse. And the only exception is nursing home. So if a person was in a nursing home, you weren't really separated. It was due to medical medical reasons. Now, if there is no surviving spouse, it could be paid to a minor child or even a disabled adult child. And if it's 2 kids, then all you're doing is you're splitting 255 divided by 2. So it's 127.50 a child. So it's just split. Okay. Now, if there's no spouse to pay it to. Now, the next slide, the next bullet talks about parents' benefits, and that's very important. A lot of people don't realize this, but if you have a child that was taking care of the bills or taking care of you and was providing more than one half support, and now as the parent, you're 62 years old and your child has passed away, the breadwinner or the child that was taking care of you has passed away, and they were taking care of more than one half support, you can actually get a monthly check off of that child's benefit, like a spouse could, like their children could. Parents can get benefits too. Not a whole lot of parents ask for it, so you don't hear about it as much, but you do have parents that were dependent on their child, and their child would put their parent down as a dependent on their tax returns, or also show that they were providing more than one half support. And if that's the case, then you have a paper trail of their bills and all of that, then you can actually apply and get monthly checks off of a deceased child's record who was taking care of you, an adult deceased child record. So that's important for people to understand too. The next slide talks about Medicare. So we're going to go right into that. The slide, Medicare eligibility. So when are you eligible for Medicare? You could start it as early as 65. Of course, most people think Medicare 65, but there are exceptions to that. If you're on regular Social Security disability, let's say you had a car accident and you couldn't go back to work, and now you're on Social Security at 40. At 42, if you're still receiving Social Security because you worked and paid into it enough, right? And again, you have to have at least 10 years of work, right? Which you probably did. So as long as you did your 10 years, you got approved for disability. After 24 months of being on Social Security disability, meaning 24 months, 2 years, about 42 years old, you'll get a card in the mail letting you know, hey, now you're eligible for Medicare. Okay, so you can get it after 2 years of being on regular Social Security disability, because remember, FICA taxes paid for part of it was for Medicare, right? So you'll get the Part A, and then we'll deduct the Part B premium, and I'll go into the different parts in a little bit. And then you can also get it through Lou Gehrig's disease. So if you were diagnosed with ALS, you could be eligible for that, for Medicare early, or kidney dialysis. If you're going through kidney dialysis because you need a kidney transplant at some point, or just kidney dialysis and stage renal, you can definitely apply for Medicare. Now, the thing about Medicare is it's not only for you. It could be for a child that's going through kidney dialysis. It could be for your spouse who hadn't worked and paid into Social Security enough. So remember, it's not just for you. Even Medicare, it could be for a spouse, it could be for your child. So proof of relationship is very important. That's why we're always asking for marriage certificates or divorce decrees, or because you have the ex-spouse, and death certificates because you have the widow, birth certificates because you might have children. So we're always looking for different certificates when you're asking for proof of relationship, when you're getting benefits off of somebody else's record. And the reason is because it's not, like I said, we need to have proof, and it's not just for you. And we always ask for original documents because we want to make sure there's no scamming, there's no fraud, right? So we always ask for original documents when it comes to that. Now, the next slide talks about Medicare. So as I mentioned, I'm going to go into the different parts. Medicare A, B, C, and D are the basic parts. I know insurance companies will try to sell you E, F, G, H, I, J, K. We're talking about the basic parts. So Medicare Part A covers 80% of your hospital bills. Like I said, 1.45% of the FICA tax is covered Medicare. That's covering your Part A. Out of pocket, Medicare would have cost you $400 to $500 a month if you didn't pay into it through your FICA taxes or your self-employment. So it is important that you understand that is a very expensive thing, but it does cover 80% of hospital bills if you're in the hospital for more than 3 days. Part B covers 80% of your doctor's bills. So if you have a doctor that takes Medicare, that's going to cover 80%. Okay. You do have to pay a premium for that. The premium in 2021, I think this was done last year. So the premium in 2021 is $148.50. It does go up every year. This is from 2020, I think. So their standard premium in 2021 is $148.50. You could disregard that that number. Then the other people closer to when you turn 65, you're going to get all sorts of things in the mail. Humana, AARP, Blue Cross Blue Shield. They want your business. Why? Because they want to be your Part C. They want to cover you at the 20%. So that's the Part C. So you'd have to pick with that independently. And then the Part D is prescription drug coverage, which is again independently with the programs, whatever, Blue Cross, whoever you pick. So that's important. And then again, more information on that is under benefits / Medicare. But I definitely want to say, if you're a TRICARE, if you're going to become TRICARE for life, you were TRICARE Prime, and now you're going to be TRICARE for life, you have to take Medicare in order for you to stay on TRICARE for life. And I always say that in this area because we have a lot of military in this area. So if you are TRICARE, you want to stay on TRICARE for life, they will require you to be on Medicare. That is not our requirement, that is their requirement. So I have to tell you that. Now, the next slide talks about the different enrollment periods. So if you're TRICARE, you're going to be under initial enrollment if you want to stay under TRICARE for life, or if you're 65 years old, right? Or if you became disabled and you were eligible in the first 24 months, after the first 24 months of being on Social Security benefits, then you're going to be initial enrollment period, okay? So usually it becomes over 65. We're going to go ahead and use the example of 65th birthday. So it's usually 3 months before you turn 65. So it's 7-month period. It starts 3 months before you turn 65, your 65th birthday, or 3 months after. So that's a 7-month period. That's your initial enrollment period all around your 65th birthday. 3 months prior, the month of, or 3 months after, okay? Now, this you want to do if you don't have insurance through a job, if you're not working anymore, you don't have insurance through a group health insurance plan, or a spouse's current group health insurance plan. So if you're currently working and you're insured under your group health insurance plan or a spouse's group health insurance plan, then you don't have to worry about it. But if you are not insured and you're not working, if you're not working or you are working, but you didn't take the insurance. So if you, so if you don't have insurance or you're not working, your spouse is not working, you're not getting benefits through their health insurance or your own health insurance through a job, then you definitely want to go ahead and take it 3 months before you turn 65, the month you turn 65, or 3 months after. If you are on benefits, you'll automatically get the cards in the mail 3 months ahead of time. So you'll get it. However, if you're not on benefits, we don't know what you're trying to do. So you will have to contact us, make an appointment over the phone or even online. You could just do your claim online under socialsecurity.gov/Medicare. You can actually do that using our website or your My Account, and you can actually go ahead and to take care of that 3 months before you turn 65. So if you're not insured under a current health insurance plan through a current employer or a spouse's current employer, if it's a previous employer, that's fine. They become your secondary, Medicare becomes your primary. But if you're not, or if you're TRICARE, you got to take it. But if you're working, you don't have to worry about it, okay? Special enrollment period is for that. So if you're 65 or older and you're working and you're covered under a group health insurance plan, either from your own work or your spouse's work, current work, okay, then you don't have to take it at 65, you can hold off on it. And why pay 2 premiums, right? If you're already paying one through your job or your spouse is covering you through their job, why would you pay $148.50 in 2021 per month if you don't have to, right? So you can delay it only if you have current work or your spouse's current work, okay? Now, let's say you didn't want it. You just said at 65, I'm in great health. I don't need it. I'm not working. I'm fine. And you just didn't take it. Then you're under general enrollment period. So when you hear about the penalty, that's what you're hearing about. So general enrollment period starts January through March of every year. You won't get your Medicare until July. And for every year you waited past the age of 65, there's a 10% penalty. So let's say you came in 2021, the premium is $148.50, but you turned 65 last year. You're turning 66 this year. You're paying a 10% penalty. So meaning you're paying $14.50, what is it? What did I say? $148.50. So $14.48 on top of the $148.50. So you're paying on top of that, the $14.48. And this isn't just a one-time thing. This is a forever thing. So if you waited 2 years, you're going to pay 20%. If you waited 3 years, you're going to pay 30%. So, and so on. So you want to make sure that you're not paying that penalty under general enrollment period. But if you are insured under a current employer or a spouse's current employer, you don't have to worry about that. However, if you're not insured, your initial enrollment period is 3 months before you turn 65, the month of, or 3 months after. If you're already on benefits, you'll automatically get the card. Now, let's say you get the card, but you're insured under your spouse's job. then you don't have to worry about it because your spouse is still working, you're insured under their plan, you can go ahead and return the card back, and we're not going to take out Medicare premiums. So again, everybody's situation is different, but those are the enrollment periods. Now, the next slide talks about the Part B application. So let's say you did delay it because you were insured, or your spouse was insured under their group health insurance plan through their current job. What do you do at 68, right? When you're ready to take it. So if you already have Part B, you want to take if you already took the Part A at 65, which is fine, you can do that, and you wish to add Part B, you're going to have two forms, the CMS 40B and the CMS L564. Both of these forms can be found under our website. So if you go to Social Security or SSA.gov, just like the bottom of every slide, /forms, and if you go under search under our form site and you put in CMS 40B and CMS L564, you're going to find these forms. The CMS 40B is what you fill out, and the CMS L564 is what your employer fills out. So we need proof, right, that you were insured under your group health insurance plan. So that's why your employer will go ahead and fill out that part, or your spouse's employer, right, will fill out that part. You will need to have both of these forms in 90 days before you actually plan on retiring. So 90 days, so there's no lapse in coverage. Okay, so 90 days before you're going to retire, or your spouse is going to retire, you want to get those forms into the local Social Security office so you have no lapse. But the CMS L564 is definitely important because that's your proof. That's your golden ticket. That's your proof to show that you were insured under a group health insurance plan. Now, the next slide talks about extra help with Medicare Part D. So if you need help, supplemental security income, as I mentioned, is based on need. We also do a financial screening for those who might need help with their prescription drug coverage. They might need a subsidy. So it's a needs-based program for people with limited income and resources, and it might help you with your Part D premium that you're paying with another company. We might help you subsidize it. So again, that's called extra help. socialsecurity.gov/extra help. We definitely try to keep it easy, our site. Now, when I send you a follow-up email, you're going to see another attachment on it. It's going to say Displaced Workers Guide, or it'll have EN with some numbers on it. Definitely check that guide out. Everything I'm talking about today, all of our programs, it's going to be highlighted. Doesn't mean you have to not be working, but it highlights all of our programs, and it has embedded links. So if you're trying to navigate through our website, that's the best way because it's very organized. So I'll definitely ask you to make sure that you check out that attachment. It will be attached to your email. Now, Medicare.gov is, of course, we're not Medicare, we're Social Security, because Medicare handles all your insurance stuff, right? Your insurance claims, your, different things, your appeals, all that stuff with insurance. So again, you can create a My Medicare account. And again, Medicare.gov this is their public facing website. That's their phone number. And again, claims and appeals, if you need to know costs, if you need to know your coverages, things like that, Medicare is going to be your way to do that. We handle money. We get you signed up for Medicare, but we're not Medicare. We don't go right in depth like they do. The next slide talks about state health insurance assistance programs. They're called SHIPs. They offer free personalized counseling to help people in Virginia. That's called VICAP, VICAP. It's Virginia Insurance Counseling Assistance Program. So we also have one in the state of Virginia. They help you. They're private. I mean, they're with the state government. They're not federal like Social Security, but they do provide you assistance. I know Senior Services of Southeast Virginia, they're also very helpful if you're trying to navigate through Medicare. So they actually help with counseling and stuff like that. So that's information on that. The next slide talks about other insurance options. You have COBRA, Affordable Care Act, Veterans, the VA. Of course, you have TRICARE, you have Medicaid. So the next slide is going to talk about Medicaid, and we're almost done here. And so because we did cover a lot of things, we're covering everything. So Medicaid versus Medicare, just like supplemental security income and Social Security disability, people use SSI and SSDI interchangeably. Same thing with Medicaid and Medicare. People get both of these programs confused. Medicaid is needs-based. Okay, so Medicaid is a state health insurance program for people with limited income and resources. In most states, children who qualify for SSI also qualify for Medicaid, so it's definitely low income. And in many states, Medicaid is automatic with SSI eligibility. Now, in Virginia, you have to go separately to social services and apply for Medicaid, you could let them know you got approved for SSI or you're pending an SSI application, and they can help you with that. So it's not automatic in Virginia, but in Texas and Georgia, it is. Now, Medicare is federal health insurance program for people that are 65 or older, as we talked about the different eligibility. A federal health insurance program for people who have been on Social Security disability for 24 months. You can also get it earlier if you were diagnosed with ALS or you're going through kidney dialysis, ESRD. So you, and not only for you, but your child can get it, your spouse can get it, right? Depending on whatever the situation is. Now, the next slide just reminds you about the widow's benefit that you can switch to retirement on your own record as early as 62 if that benefit is higher than your surviving benefit, meaning you can't get benefits off of your own record until you turn 62. So if you're getting benefits as a widow at 60 or even 50, you can then switch over to yours at 62 if you choose to do so. So that's an exception as well. Like you can get remarried after 60 as well. Next slide talks about applying for benefits. You can apply for this online. You can give us a call too, but you can apply for it online, retirement, spouse, disability, or Medicare. If you go to our website, socialsecurity.gov, you'll see icons right there, retirement, disability. And it's very easy. You could just go to socialsecurity.gov/retirement/disability/Medicare. All you got to do is put a backslash in whatever you're trying to do. Again, you can see your record online too because of the My Social Security account. You can also contact your local office using /locator, put in your zip code, and you'll be able to get that information too. We also have our 1-800 line available, 1-800-772-1213. You do have to, for children and for survivor claims, you do have to make an appointment. Supplemental security income, we're still taking appointments for those too if you need a file for that. If you're disabled, under 65, you have to have a disability and low income. And if you're over 65, we're just looking at your income. You could definitely do that as well. So the next slide is letting you know, check application status with your My Social Security account. Again, definitely you want to log in. Every time you're trying to take your claim, if you're ready, I would recommend you trying to do any claims online rather than trying to contact us at the local office. Why? Because you're not going to get an appointment for a couple of months even, right? Depending on how busy the office is. Number two, you might feel rushed, right? So that's why if you can start up the application online, you could take your time and you don't have to do it in one sitting. If you want to save your application and come back to it tomorrow, you'll get a re-entry number. You can go right in with your re-entry number and you could start it up again. You could take your time. 50% of our disability cases get denied due to lack of information. So you want to take your time with this. You don't want to feel rushed. So absolutely go ahead and try to attempt to do it online. You'll get a re-entry number. Once you actually submit your application, you'll finally get a confirmation number, and that means that it's gone up. Okay, but at least, that's a good thing. Again, if you get denied, you can file your appeal online. You can check the status of your claim. That helps you save a phone call, right? And save you some time. So you could do a lot of things. Again, the next slide is just a reiteration, what you can do. If you receive benefits, again, you could still get your Social Security card online, whether you're on benefits or not, as long as you're over the age of 18, a US citizen, and you're just asking for a replacement card. If you need proof of your income, you could get your proof of income letter. If you need to report your wages, if you're on disability, you can do that online. You can check your benefit payment information and earnings record. You can change your address, your phone number, your direct deposit, request your Medicare card online. If you lost your card, get your 1099 for taxes. You can get all your letters online, so they're not coming through in the mail. And you can even, if you feel like you might need a person in the future to help you with benefits, you can even appoint designated people online. And if you want to switch them, you could switch them too. So that's very beneficial. I cannot tell you enough. I even have an online account, as I mentioned. And now we're ready for questions. So we do have some FAQs. We're not going to go over them because in the attachment you're going to get, you'll see them. But really, I'm interested in knowing what your questions are so we can go ahead and address those. So thank you so much for having me tonight, and I'm happy to answer any questions.
Thank you, Liz. It looks like we have a very small group tonight.
Yeah, which is great. We have more time for Q&A, so that's great. Yeah. I don't know if you guys want to unmute yourself or use the chat box, whatever you guys want, I guess.
Oh yeah, either option would be fine.
Yeah. Just hope I didn't put people to sleep. That's all.
I have a quick question. I'm looking at my statement right now, and there's a category that says total family benefits cannot be more than.
Right.
If I have a disabled child, I'm assuming that number, we can't exceed that number. Would that be just for myself, or would it be my spouse, myself,
So-
and our disabled child?
It would be for everybody. So there's a family maximum, and that's what it means. So if you look at your own disability or your own retirement amount, it's not going to be more than that, right? So that's the difference. Yeah. So if you have one child, then they would get up to between you and them, that would be your up to amount. If you have a spouse and they're full retirement age and they're going to wait and your benefit is more than half of theirs, and they're going to get their 50% off of you, that's fine too. It's not going to change your amount, but that would be the max. So that's the max we can pay out depending on your record. Again, if you continue to work, that amount's going to go up because the more you put in, the more you're going to get. Your amount's going to go up, that amount's going to go up. But yes, there is a family maximum that gets paid out. So yeah, it just depends on who's getting onto your record, what their age is, what their situation is, and that's their maximum. That's the maximum household we can pay out based on your earnings. So yeah.
So I'm sorry to clarify. So it's whoever's under my record. So if for say, my disabled child is on my husband's record, then those two amounts can't go over the family benefit, but then
Yes.
my benefit would not count against that. Is that correct?
No, because that's based on what you worked and what you paid into. Yeah. So that's based on your taxes, your FICA, and then your husband is going to have his own family benefit amount. So yeah.
Okay.
Yeah.
All right. That
Great.
answers my question.
Good. Yeah. And the thing with family benefits is it's great because for a child in that situation, let's say both parents are now filing, that child can get a combined family max too. So we actually not only look at your family max and his family max, but then we also look into see if he can get a little bit of both. So if you have two people that are filing and you have a minor child or a disabled adult child, we'll even do a combined family max. So we'll look at both records and see what would be beneficial if we can combine the two, or he'll get the higher of the two. So yeah. I see there's a Ruth. Any questions? I'm open. So definitely able to answer any questions. So there's no questions. Did you just want to wrap it up, Adrian?
Yeah. So thank you everybody for being here tonight. Just to really reiterate, both this presentation and the one we did last week will be on the Newport News Public Library's Facebook and YouTube channel. So you'll be able to, if you missed anything, you can always go over it again. And then I'll be emailing out those materials to everybody who registered for the event. So you'll have those to look through as well.
Sounds good. Are you gonna register? Are you gonna? Oh, you already sent out the overview for last time. So are you gonna send it to the people you sent it out to last week too? Since this is all of the overview, or?
Yeah, I'll go through the registration list for both events. Just make sure there's no I don't send two emails to someone.
Yeah, that's fine. Yeah.
But yeah, thank you for the presentation, and we hope
No
to.
problem. And we'll set up some more dates, maybe not closer to a holiday.
Yeah.
It's good. The question was good. So yeah.
Yeah, we'll cover some more specific topics in the future.
Sure. Sounds good. Thank you so much. Thank you.
All right. Thank you. You have a good night.
You too. All right. Bye.
Bye.